Hi, welcome to today's Client Question Thursday. Today I'm going to tackle the question about it happens all the time and whether you should pay your contractor cash. From time to time, your contractor would come to you and say, "Hey, like I want you to pay me cash." Should you do that? Is it even allowed? Is it even legal? What about CLA? What do they do? Now, um, Now, contractor generally want to get paid cash. Cash is a form of payment, so you are 100% allowed to pay cash. Now, but whether or not you will get a receipt from your contractors, I don't know. Um, Typically speaking, the going industry standard is that if you are asked to pay cash, typically speaking, they will not provide a receipt for you, which means that you don't get a receipt. And if you ever get audited by CRA for that particular expense, you will never be able to claim it because CRA would disallow it as long as you do not provide the evidence. No invoice equals if audited, disallow immediately. So doesn't really make sense. What does CLA say? CLA has a whole website dedicated to this underground economy. And of course, they say, well, you shouldn't really help with this underground economy. But let's forget about what CLA says. Let's look at the numbers. Is it worth it not to get an invoice and pay your contractor cash? Because everyone can just go to the bank and get all the cash out and then pay your contractor. But is it really worth it? What are the numbers? Now, here, I'm going to go through some numbers with you. Now, my spreadsheet is not very pretty, but I'm going to use that to go through it with you. If you look at a renovation, let's say a basement renovation, let's just assume it's $50,000. I pick a random number here, round number. If you get a receipt, technically the contractor is required to charge you HST, so you do $50,000. HST, total renovation expense is $56,500. Now, if you are owning the property in a corporation, I'm talking about investment property. If you're owning an investment property in a corporation, your tax rate on expenses are about 50%. But if you're talking about a renovation that's big enough that is considered capitalized improvement, that's a different story. Let's stick with the simple one-time write-off expense. Let's say you can write off the $50,000. If you can write off the $50,000, your tax rate in the corporation is 50%. About half of it is can be financed by CLA essentially because you can use it to deduct off against your income, and the income is being taxed at 50%. So essentially what it means is that CLA finance 50% and the net after tax cost is $28,250. So half of that. Now, let's say you are offered the opportunity for not paying HST. HST can be substantial. If you look at the HST amount is $6,500. It's quite a lot. Now, let's say you're allowed to offer the opportunity to pay cash and they don't charge you HST. Now, so then your cash outlay is $50,000. Now, CRA is not going to allow your deduction, assuming that there is no receipt. If you have a receipt, that's a different story. But assuming there is no proper invoice, no proper receipt in place, so there is no tax saving. Now, CRA is not going to finance any cost of that, and therefore your net after tax cost is $50,000. Now, obviously, it's not worth it in our situation. Now, let's assume that if you do the renovation and the renovation has to be capitalized as part of the building, so you cannot deduct it as a one-time write-off expense, but rather you can deduct it against a future sale price, which will be 50% taxable only. And assuming this is a long-term buy and hold, now if it is only 50% taxable, the net after tax cost is really $42,375. The numbers change a little bit. If you pay that person cash, you still don't get the deduction, but your difference is about $7,600. So slightly different, slightly better. Now, let's say you own the property in your personal name instead, and you own the property and your marginal tax rate is only 30%. So by typing in 30%, your true after-tax cost of the renovation would be $39,550. If you pay cash again, you're still losing money on about $10,450. Now, let's say, going back to the original calculation, your tax rate is still 50% if you earn anything over 200,000 or close to 200,000, you would be at this 50% tax rate. Now, let's see if you offer a deeper discount than just no tax. Let's say the contractor is willing to do 45,000. Now, see, like the math works slightly differently, but you're still losing money. This is the loss from paying cash. And then we say, let's say 30,000. Now, it's almost as if you have to get a discount of $20,000 to make it break even. I think if you do 29,000, 28,000, it would be even better. So only if at 28,500 you would break even. So unless your contractor allows you to pay $28,500, when your tax rate is 50%, chances are it probably wouldn't break even. Now, the reality is the renovation may not be a one-time expense. So if you take the 25%, here it's being capitalized, and so only 50% is taxable. That's why this is only 25%. Your number would work differently. So 50,000, you're still losing money. $40,000, you're still slight ahead. So the number is not as simple as, hey, does it make sense? And majority of the time, it doesn't make sense for you to participate in this underground economy. Going back to my presentation here, majority of the time, it doesn't make sense. Nobody wins according to CRA. And you surely, if you ever get audited, it's not going to help. Unless the discount is big enough as an investor, which we illustrated in our example, you will miss the deduction and you lose more. Now, finally, if you like our content, sign up to receive our free weekly tax tips on realestatetextips.ca. We prepare blog posts to share all these real estate tax tips on our website once a week. We also share these content on our website as well. If you also like our content, make sure that you like this Facebook page and make sure that you also like our video, so then you will get reminder on every week when we release a video. Thank you, and that concludes our presentation.